Hello friends, in this video I am going to talk about types of mutual funds. It is very important to know about different types of mutual funds to get maximum benefit out of it. So let's proceed. Let me first give you in very brief, in very simple way how mutual fund works. So mutual fund companies collect funds from many investors and then based on the investment objective of the schemes, invest the funds in the market. It is done by the professionals having knowledge about the market and experience to do so. So depending on the mutual funds portfolio composition, investment styles, mutual funds organization structure, or even investors fund buying approach, etc., mutual funds can be categorized. So here I am going to talk about mutual fund categorization based on investment style, funds organization structure, funds portfolio composition and investors buying approach. So let's start with funds portfolio composition. So first is equity fund. Equity funds are those funds whose scheme's objective is to invest largely in equity shares and equity related instruments. So when the objective is to have capital appreciation, then equity funds are first choice among other funds. There are many types of equity funds like diversified equity fund, sector fund, thematic fund, ELSS, etc. Second, debt fund. As equity funds primarily invest in stocks, debt funds primarily invest in fixed income securities like bond, T-bill, government security, etc. Debt funds are also known as income fund. Return on debt funds are primarily from the interest earned from the fixed income security of debt fund portfolio. So debt funds are most suitable to investors who want to invest in mutual funds but not in equity fund. There are many types of debt fund like diversified debt fund, gilt fund, money market fund, fixed maturity plans, floating rate funds, etc. Third one is hybrid funds. These funds are basically mix of two or more asset class. In hybrid funds, mainly investments are made into both equity funds as well as debt funds. But again, it depends on the investment objective of the fund. Monthly income plan, capital protected schemes, balance fund are type of hybrid funds. Then comes gold fund. As its name suggests, in gold funds, investments are made into gold and gold related securities. Popular gold funds are gold exchange traded funds and gold sector fund. Now let's talk about based on investment style. Mutual fund involvement in the scheme could be actively or passively managed. So first is active fund. So when it is actively managed, it is called active fund. In active fund, fund manager has bigger role to perform as performance of the fund depends majorly on the securities selection by the fund manager. In active fund, fund manager has freedom to choose the securities based on the investment objective of the scheme. And that is the reason it comes with higher expense ratio. Second one is passive fund. Funds which are managed passively are passive fund. In passive fund, fund manager roles are very limited because they need to build the portfolio based on index, which is called benchmark. The whole purpose of passively managed funds are to track the given index. That's why a fund manager has no choice in security selection. So in passive fund, investors cannot expect returns more than the benchmark return. Now coming to based on funds organization structure, to understand it, like AMC can launch a scheme in which AMC can organize themselves in such a way that post NFO, AMC can allow investors to subscribe or redeem mutual fund units from them. Or it could possible that investors cannot go to AMC to subscribe or redeem, but they need to find the different way. To understand better, let's see how it is divided. So first is open-ended funds or open-ended scheme. So open-ended schemes are those funds in which even after NFO, new fund offer period, investors can subscribe or redeem the mutual funds from AMC. Second is close-ended funds. So close-ended funds are those funds in which after NFO, investors cannot subscribe or redeem mutual funds units from AMC. So what is the alternative to subscribe or redeem? So as per SEBI regulation, all close-ended funds needs to be listed in stock exchanges. So post NFO, if someone wants to buy close-ended funds, they need to go to stock exchange. Third one is interval funds. So interval funds comes in between open-ended funds and close-ended funds. Meaning sometimes interval funds behave as a open-ended scheme, sometimes as a close-ended scheme. So the period when interval fund becomes open-ended schemes are called transaction period, and the period when interval funds behave as a close-ended schemes are called interval period. And the fourth is based on investors' buying approach. I think we need to consider these as also one category. So investors can buy mutual funds units directly from AMC or through intermediaries like sales agent, broker, distributors, etc. So let's see. So first is direct funds. So when investors purchase or redeem mutual funds directly from AMC, then it is called direct fund. Since purchase are made directly from the AMC, the expense ratio of direct funds are less as compared to other funds. Other is regular funds. So regular funds, when investor purchase or redeem mutual fund units from intermediaries, then it is called regular fund. So friends, based on these four categories, these are the different types of mutual funds. But you need to remember, one mutual fund can be equity fund based on fund's portfolio composition. Same equity fund can be active or passive fund based on investment style. Same equity fund can be open-ended, close-ended or interval fund based on fund's organization structure. At the same time, same fund can be direct fund or regular fund based on investors' buying approach. So next time when you will purchase mutual funds, don't get confused that these all types are different types. No, based on category, these are different types. So based on different categories, these types are popular. So friends, if you subscribe to my YouTube channel and if you put notification on, so whenever I will upload new videos, it will come to you and you will get benefit out of it. Please share my videos to your friends so that they can also get benefit by watching my videos. Thanks for watching my video.